All right, rough day here. S&P 500 at 58.35 is a 2% sell-off. Kevin Green's going to dissect the action with me here as equities rolled over hard and aren't really seeing much ability to get back up on their feet, KG. Gross candle. Take me through the chart.
Yeah, so if we're looking at it on the longer time frame here, Oliver, we did see a little bit of a breakdown, right? This is actually a bearish engulfing candle of Friday's candle, which is not really a good sign. But we still have some, we still have some time. Maybe we catch a little bit of a bid and try to hold this channel that we've been kind of focusing on. If not, and we break through, we got a really big problem. Stochastics, obviously, we did not see that close where we had that bullish signal. And then MACD actually officially just completed its full-on bearish cross. I don't have it on the chart there, but it is something to kind of note. And then last but not least, when you're kind of looking at how far we are away from the 200-day moving average, Oliver, we're only about 100 points away, 110 points away from the 200-day moving average. That's basically another day like today. We would kind of get there. Now, you could say that that could be a decent little reset. Maybe some buyers really step in, but that also kind of shows the lack of momentum that we've had over the last couple of weeks, and then also maybe some fear coming into the market. The interesting thing, and I always kind of go back to this, is volatility. Volatility is obviously elevated right now. We're at a 23 VIX right now. Okay, the actual move, a 2% move, is around a 32, 33 VIX, usually, right?
Implied.
If we're going to map that
kind
out.
of the
exactly
suggested math, rule of 16.
Exactly. So even though we are seeing it elevated, it hasn't really blown out yet. So maybe that's still going to be on the horizon, but that is something I'm kind of being a little bit mindful of. Obviously, there's a lot more put flows taking place in the market. And then we do have this kind of blowout. We kind of talked about VIX up, stocks up in the pre-market trading session here today. Maybe that was kind of foreshadowing maybe some uncertainty in the market here, but not a great day. And technically, we are still kind of breaking down, and the bulls really kind of need to get some buyers to step in here.
Okay, if we come back to the first chart for the perspective, since VIX and S&Ps now have kind of normalized, but to your point, maybe still a little bit lower than what we'd expect for a 2% move. If we come back to the big chart, the advanced decline still in the same territory it's been in. Last week, we actually had more stocks up than down by the time we closed out Friday in the S&P. Today, it's a little bit different. It's pretty broad in terms of selling. But is there a way to look at that advanced decline, look at the general participation, and say, okay, this is just kind of a blow up in some of the tech and NVIDIA-centric stuff? Can we dismiss it at all?
So look, we lost participation or momentum throughout the day. Let's say that. When we started the day, we had a lot more participation. Around 82% of the stocks in the S&P 500 were in the green. And as the day kind of went on, obviously we started seeing a little bit more of a rotation in the defensive sectors like real estate, consumer staples, and healthcare. The thing that is a little bit different, though, on this one, Oliver, is that even the defensive stocks are actually losing some steam here. If you're kind of looking at consumer staples, it's up about 0.25%, but it's pretty close on going right on the day. And that's an environment that you really do not want to see. You do not want to see every single sector in the red or just this outsized selling just across the board. That's where it gets a little bit more concerning right now. What we want to see is actually broader participation for tomorrow. Maybe we still see some weakness when it comes to semiconductors or what have you. But if we have broader participation, that just means that this is a little bit more of a rotation. This is a little bit more than an aggressive, rotation taking place for now. And this is, if you look at it seasonally, this is on track though. Still, like we shouldn't have been at peak vol on last Thursday. So this is kind of normal. And we have a lot more economic data this week. So let's weather the storm here. I think it's going to be a stair-step kind of approach to the downside here. And you got to stay tactical in this market and find areas of opportunity or pockets. It's not a set it and forget it type of market right now.
Sure. If it's a stair-step selling, does that push against the point that maybe VIX is too low? If you do want to bet on further downside, if we think that range is going to break, if the gamma wall breaks or we get really pushed to the downside, is the move then to own volatility? Is it, 23 obviously is still significantly above average, but considering the size and to your point, the kind of rule of 16, the premium still may not look totally insanely expensive.
Yeah, I mean, if you want to own vol, I would probably own vol in duration right now, rather than maybe looking at something that's expiring this week, or maybe even something that's expiring next week.
Okay.
And you actually are seeing that in the option structure for equities across the board, both on the call side and put side. If you go out 3 weeks, 4 weeks on a relative basis, it's actually fairly cheap, and the realized vol is actually still higher than that implied vol. So if you wanted to, you could go that route. The other route you could also go is, selling spreads within the VIX right now as well. So VIX is elevated. What you could do is either buy, VIX put spreads if you wanted to do that, or you could sell actually in the money call spreads, which sounds crazy, but once again, it's a resetting oscillator. So at some point in time, the VIX will go down. That is something that is for the most part guaranteed in this market. VIX will ratchet up and it'll also come down. You could also look at some exposure on selling those call spreads, either at the money or even in the money. You'll receive a credit in, and if you look at your risk reward, ratio, that could be a way to play it.
Like
for
that.
now.
Yeah, nice. Good answer. Hey, KG, last thought on the technicals, because we are now back. Anything below 58.50 is basically eating into the election gap from November 5th to 6th, and that's held, which I think has been very symbolic technically that has held. If it breaks, though, how do we start to figure out where downside is? Because there is obviously a big uptrend that still has held in this market. So if we break that,
it hasn't.
Yeah.
The uptrend broke on Friday. So you remember that monthly chart that we were looking at on Friday, and we had that trend line to the upside, basically from the October bull run. And what do I mean by that? If you go on a longer term time frame, we had this lull in the market. We basically had a cup and handle. We pulled back, and then on October, that's where we kind of moved to the upside. And we've been riding that trend line the whole time until last week it broke. So if you're looking at the E-mini S&P 500 future,
well, we're still above where we were Jan 13th, though. We got below 5,800 mid-Jan on the DeepSeek stuff, so we haven't cut below that yet.
But the overall longer term trend line itself has broken. It has turned from support to now resistance. That's kind of a big deal. So, we wanted to kind of have a little bit more of a recovery this week. I'm not trying to freak anybody out, but the trend itself is actually, from a technical standpoint, actually has been broken on a longer term time frame. So we're trying to really kind of recoup that, because we've had such a consolidation in time and in price. That lack of momentum is why that trend line has been broken. I would say, Oliver, if you are a bull here, you probably want to see us just come back and check the 200-day. Qs are, for the most part, about to hit it. They may even hit it today if we continue to see aggressive selling. But you may want to just come back to the 200-day moving average. Let some buyers really try to step in here. And if we fail at 200, then we got a little bit more of a problem here. But this is not really great price action. But I would wait until middle of March, towards the end of the March, to really kind of capstone to say, is this a major breakdown of the market, or is this just a temporary correction that we see in bull market cycles?
Great stuff. Thanks, Kevin Green. Like the perspective.